All right, welcome everybody to the stock market review, especially for our yummy traders. Hope everybody's doing good out there. All right, so take a minute, get ready. Hope everybody's doing okay. Markets are doing pretty good today. So we're going to go over an overall market forecast, followed, of course, by a little bit on the housing market as well. And then if we have any time left over, we'll be together for about, I guess, 30 minutes today. If you have a few stocks, I'll be glad to look those up, but I don't want to go over the 30-minute time limit. All right, so let me go through some administrational items first, and then we'll hit it. So give me 1 second, and let's go ahead and get going. All right, so first thing I want to go over, of course, are the risks involved in trading. Like I always say, without those risks, there are no opportunities. So the two really go hand in hand, not only in trading, of course, but in life as well. We want you to realize in the trading, the financial markets, there's no guarantees. We work in a realm of probability. So you have to always protect your downside, right? And that really means, what that means is that you want to know your risk on each and every trade that you take. So if you get stopped out, you know how much you could potentially lose. Now, obviously, if you take the trade, you're not going to want to lose money, right? But we don't always win. And that's just the reality of trading the markets. So you do always have to use risk control on each and every trade. And then, of course, we want you to also trade with money you can afford to risk, called risk capital. That's really important as well. And then finally, any of the ideas, these are my opinions on my market analysis. I use Elliott Wave, I use our software tools, I use Fibs, a whole bunch of technical parts in the technical analysis toolbox, so to speak. And some of these recommendations may or may not be suitable for you. So always run everything by your financial advisor or whoever manages your money to be sure what we talk about here is suitable for you. Like if I look up a trade and I recommend that, that may or may not be suitable for you based on your personal situation, which I don't know. So always run that by somebody that is managing your money for you, okay? Just to be sure it's suitable. And then finally, like I said, past performance doesn't guarantee future performance in the markets. So you always have to be attuned to that. All right, if you need help in knowing how to calculate your risk on every trade, and you want to take a deeper dive into risk control, which I highly recommend, definitely check out our books on money management. I've got 2 of them up there. I also got a book on the Elliott Wave and a couple other books, and my brand new book coming out in 2024 called The Art of Trading, 2nd edition, being published by Wiley. So you can check out those either on our website, or I'll put a few links up in the recording later on. All right, so we're going to start out with economic announcements today, Wednesday, February 7th. All right, NBA mortgage applications have come out already. These are Eastern Standard Times. Those are kind of fun to look at. You kind of get a pulse of how well mortgage apps are doing. And between you, me, and the lamppost, not too good, okay? But you can check it out every week. So I kind of always like to look at that. International trade in goods and services, EIA petroleum status report, few speakers, consumer credit, okay, at the end. But the big one is no FOMC this week, all right? They spoke earlier. All right, so Thursday, February 8th, jobless claims. We'll keep an eye on that. All right, the EIA natural gas report and Fed balance sheet. All right, that's Thursday, and we end the week Friday, February 9th, Baker Hughes rig count, which is a weekly release, and then we have a speaker, okay? So that's pretty much it. Now, just so you know, this chart here comes from a service called Econoday, and it's really good, and it's on the web, and you can go there, but I find it a very helpful synopsis of the economic announcement, so I do want to give them credit for that. All right, now when we look at charts, we're going to be using tools here at traderscoach.com. We have a dedicated website called appliedrealitytrading.com as well for our software tools. You can check that out. We offer a 30-day trial on our software. It's not free, it's a paid trial because we get you all set up. We remote onto your computer, make sure it's installed and working properly. So there's quite a bit of service involved in this. And we give you all the manuals on how to use the software. So if you're interested in checking it out, taking a test drive, kicking the tires, you can certainly do that. We have charting software, we have scanners, we have risk control software, and our software trial does give you all the software tools, not just one or two, every one of them. So you can check them all out during that 30-day period. All right, so let's jump into the charts and take a look and see what's cooking out there. All right, first thing, this chart was done on Sunday. So if you subscribe to our Yummy services, and we'll put a subscription area in the, excuse me, in the recording description below later on. But if you subscribe, you get all these charts and my written report every Sunday. So you're ready to go before the market opens on Monday. So let's take a look at what you get here. So right now, we're looking here at the daily chart, which I prepare on Sunday. And I've done a couple things here, and some of it may or may not look familiar depending on what type of tools you use. So in our software tools, we have some indicators here at the bottom, which is proprietary to the Applied Reality Trading TradersCoach.com system. And this is called the OWL, which measures momentum and counts the Elliott waves. This also is the PTF, which is really helpful because it indicates certain times whether we're going to have more highs or lows in the market. We have the Trend Line Master giving us the current trend. And then also, too, we have the ERI taking a look at fear and greed. So that's kind of what we're measuring at the bottom. And then on the actual price patterns, you'll see these fractal pyramids, which we use basically for trading the swings in the market and using those for entries and exits. So keep that in mind. All right, so what we think we have going on here overall in the markets right now, this is the Dow Jones, and I'll show you the NASDAQ, and I'll show you the S&P in just a bit. But what we think we have is a leg moving up that should end sometimes in this area that I'm circling called the Wave 5 target zone. So in terms of Elliott wave, it looks like we had a Wave 3 complete in 2022. Then we had a kind of a broad-based correction ending basically in the October, I would say October-ish time frame, maybe a little bleeding over to November of 2022. And then since then, we've kind of been in this Elliott wave 5, which is the last wave in a trend. So with Elliott wave, there are 5 waves in a trend. And the trend usually ends in wave 5. So once we broke above this 3, this high back in 2022, it was pretty confirmed at that point that this was a 5 and not part of some other wave sequence like a major correction. So this is where we're at right now. I do think there's a very high probability we will get into the wave 5 target zone sometime in 2024. I don't think we're going to get up there without having some type of, I'm going to call it small correction rather than a major correction. So I'm going to call it more like a profit-taking correction at some point that probably will cause the markets to come down maybe for a month or two and maybe settle around the 35 range on the Dow. And then it should recover and then head back into this target zone. So I don't think we're going to reach this target zone on this one leg up that we've been in really since October. Now, what I do like, and I'm starting to see, we'll take a look at the live chart in just a minute. We're starting to see a little hook there. And so I'm going to focus on that when we take a look at the live chart. But that's kind of where we're at. Now, this target zone for wave 5, to me, looks to be around 40,281 up to 47,420 and some change. So it's a zone, okay? Where is it going to stop exactly? Nobody has really that crystal ball, especially this far away from the target. Maybe when we get into the target, we can get a little more specific on it. But that's kind of the zone where we think we're going to get into. And again, I think we're going to hit that sometime. I'm going to call for the latter half of 2024, because I do think we have to have some type of profit pullback that could take a couple months before the market resumes and gets anywhere close to that target. And, with the markets, it's always an ebb and flow. It moves up, all right, a little bit of profit taking, could move up again, get very close. We could have another area of profit taking before it eventually gets in there. Or we could go up, get real close, one profit taking, end, and then get there. So it's hard to say right now exactly what the sequence is going to be. But for right now, we're still moving up, okay? We do see bearish divergence in our OWL indicator measuring momentum. So what that means is as the market is making highs, the momentum is not, okay? And that is what we call bearish divergence. So we usually see that before we see an abrupt turn in the market. So that is kind of indicating something could be lurking out there for a pullback. All right, so that is the daily chart. So the next thing I want to show you is a chart called a shorter time frame, which is a 60-minute chart, which basically is going to show you where I think the market could pull back to on this next profit-taking movement that we're expecting. All right, so here's the 60-minute chart. And again, this was given to you on Sunday. And this chart here, I have put the profit-taking zone in here. And whenever I have a profit-taking zone or a wave 5 target zone, those basically are Fibonacci numbers. All right, for example, the previous wave 5 I showed you was a fib extension. Here on this chart, what you're looking at here is a profit-taking pullback zone. So I'd be using a fib retracement on this. And so this retracement level has about a 70% probability of basically indicating that when this does begin to retrace or pull back, 70% of the time they are in between those two blue lines, which is that red box I've highlighted. Now, 15% of the time they're shallow. They only pull back up to around the fib level of 23.6 to 38.2. And 15% they get extenuated and go beyond that level, but never going above wave 1. So in this case here, this breakout here would have been 1, 2. So we can't go into this level here. And I don't think we will. And that is an Elliott wave rule, okay, for those of you that care about that. All right, so now we're seeing bearish divergence here, just like we saw on that chart. So I think we're kind of due, all right? Now, that doesn't mean it can't be going up for another week or so, but certainly it's looming, let's just say that. And this pullback area that I've got here, if you can't see it on the webinar, is 36,902, okay? And that's 38.2% first level. And the other part of the zone that we think it could go down to is 61.8, which is 35,726. So it's in that area in here. All right. And then after you get down there at some point, then it will recover and should begin to move back up. So I'm kind of looking for this. And I think actually when it pulls back into this area, once we see some stabilization and moving back up, that's going to be another area where you can start buying again. All right. And take it to the wave 5 target zone, so to speak. So if you've enjoyed this run that we've been in since October, way down here, all the way up to here, you've got a decision to make at this point. Do you want to take profits on that and just get out and then try to get back in at the profit taking zone? So you're trying to time the swings there. Or do you want to just hold on to these positions until you get to the wave 5 target zone? If that's the case, your stop's going to have to be under here. So quite a bit lower than you may be comfortable doing. So you have to make a decision on that to decide on each individual stock or whatever you're trading. If you've got that kind of profit in there, you've got to come up with a management set of rules, so to speak, to decide how you want to play it. You know, you may want to scale out a little bit and then put your stop for your rest of your position further back. Or you may have made enough money that you're really happy. You know, when you go into a trade, you kind of plan on a target, right? And I'm sure all the targets have just about been reached for the most part. So that may be good enough reason to get out on the next pullback and keep your stops kind of close. But again, I'm going to leave that up to each one of you and how you want to play that. But I think that's coming, but so far it hasn't, okay? So just keep that in mind. All right, here's the S&P 500. This was another chart I created on Sunday. We can look at the live chart in a moment as well here. But on this chart here, we've taken out the high. You can see the weekly chart on the far left. That's this one here. when we've taken out the high here. This is our target zone on this particular market, which is the S&P 500. So we're looking around 5652 up to 6988. We are also looking as well for a pullback on this. So we expect this to pull back at any time. And current pullback zone is around 4733 to 4583. Now, a couple things I want to talk about here. When the market makes a high above the levels I've drawn here, then I have to redraw them, okay, because the anchoring points change. So just keep that in mind. All right, so that's the S&P 500. Again, we're seeing bearish divergence on all the time frames for the most part. So again, it's looming. The pullback is looming. Also, we have a red PTF here too. So kind of interesting what's going on in the markets right now. I'm actually kind of like configuring maybe we'll get this pullback pretty soon, like in the next couple of weeks maybe, if not sooner. All right, NASDAQ, same type of thing. The only thing in NASDAQ, I got some shorter term target zones here. So again, we're getting ready for pullback territory as well. So you're going to see this across all the broad-based markets. All right, so that's kind of where I'm at now. All right, let me just take a look at this. I'm going to magnify this up a little bit for you guys to see. I want to jump for a minute to the housing market because I think it's important to talk about that. So many people are dialed into the housing situation now. All right, housing prices are very local, okay? It depends on your area. For example, in the San Diego area, prices are still pretty high, all right? There's not that many sales though, okay? I will say that. So, you know, there's a trade-off here. The prices have remained high, but you don't see still a lot of inventory yet. So there's not a lot of sales. And we'll see what the spring brings. Now, you know, of course, everybody knows there's talk about interest rates being cut at some point. I don't think interest rates are going to get cut as much as people had hoped. I think maybe you'll see them stay more flat. I don't think they're going to go down that much. Could they? They could. All right. It's an election year. They want to spur the economy on as best as possible. So they may drop them in order to do that. All right. If they keep them the same, all right, you can expect housing to kind of remain in this bubbled area here. And, you know, I think the markets are also going to be high, maybe through the election year, and then we'll see what happens. But at this particular point, on this graph here, which is done by RE Venture Consulting, it's a really great graph. It's about 6 months old, so it came out in the summer. So we're kind of waiting for them to do the update on this. But as of the summer, prices were about 31% overvalued. And I think in some areas, prices have gone back up a little bit. So this number might even be higher now. But the way to read this chart is what they're doing is they're taking home prices as compared to income levels, the average income levels. And every time you see it get red, you're in a bubbled area. So this was back in 2008 during the financial crisis. Okay, you can see that date down there. And basically home prices got very far away at that point from what people could afford. All right. So likewise, you get the correction. Also, you had a whole bunch of other issues going on then as well. But, you know, look how much it went up in the beginning. And then look, it remained bubbled for quite some time. Let me just recircle this. So, you know, it remained bubbled for quite a while before we saw any type of movement down. And you really didn't realize the big movement down was coming until it broke here, which, you know, was a year or so, okay? Maybe a couple years, all right? So bubbles can be bubbled for quite a while before they break. Here's the current situation as of the summer of 2023. It's a darker red, indicating we are even more bubbled than we were in 2008. In other words, housing prices are further above the income levels. So that's kind of an interesting tone right there. So, you know, again, it's kind of like, how long can we remain bubbled? All right, nobody has that real crystal ball, I think. If you do, let me know, please. But we can remain bubbled here for quite some time. But again, usually markets correct and come down. They may get delayed. Yes, it's an election year. Stimulus may be provided in certain areas to keep this bubble alive for a little longer. But eventually, I think the market has got to come down to a reasonable level again. So again, I think this is not a matter of if, it's more a matter of when. All right, we'll keep an eye on that. And in some areas, it is correcting more than other areas, okay? So again, real estate's one of those local type of thing. This is not commercial, by the way, okay? This is just residential. All right, now on this chart, hopefully you can see this. This is kind of an all white chart. But on this chart here, this is the Case-Shiller index versus the CPI. And this red line down here is the Case-Shiller. So I'm going to just put CS right there. The black line under that, okay, is the CPI. And the CPI is the Consumer Price Index. So we're measuring on this chart the home prices across the United States compared to the CPI, which measures inflation. So the other one we looked at was basically home prices versus income levels, which showed a bubble. And then this one here, what we're looking at is home prices versus inflation, which is also showing a bubble. So now if we go to the 2008 area, which is over here, you can certainly see where the Case-Shiller, which represents pricing, okay, accelerated. However, notice the CPI didn't, okay? It went up, but not at the level that housing did. And so when it gets far away, when this Case-Shiller gets far away from the CPI, all right, that signals a bubble, all right? And sure enough, you know, the markets remained bubbled for a while, just like they are now, and then eventually headed south, all right, to get more in line with the CPI. Now, if you look at the Case-Shiller index, it really hasn't been touching the CPI since about, what, I'm trying to read this, like 1984, okay, which was way back here. So you're never going to get it touching, but you have to get it reasonable, okay? It has to come down to where housing is staying pretty much ahead of inflation like it always has, but yet at the same time is not manic like it is now. Let's go to the current day here, okay? And this is a current chart. So this is 2024, okay? And notice how, you know, housing spiked up again. So in 2023, all right, when I showed you that chart on income levels, it was still coming down here and doing that. Now it's going back up again. So we've seen a little spike again in home prices. And notice the CPI spiked up a little bit because inflation increased. But housing, all right, this distance from here to here, all right, is nowhere in line. So again, this is showing a bubble because the distance from the CPI to the Case-Shiller is even now greater than it was in 2008. So that causes me concern that, you know, again, markets eventually revert back to the norm. So if that's the case here, it's not a matter of if again, it's a matter of when. So the case I'm trying to build here based on these graphs here is that yes, housing is okay still in terms of price, but we're due, right? We're due for a correction. And so I think it's important to realize that. Now, will the correction occur when the stock market finally reaches that target and then sells off? Because when it reaches that wave 5 target, we're in for a big doozy correction. I mean, we're going down probably to the COVID low. So we're not talking about a small correction at some point. It's going to be a big one. That probably, the way I see that now, I don't think that's going to begin to happen until maybe after the election and into 2025. But I could be wrong. I mean, some black swan event or something out of left field could come and cause the markets to topple at any time. All right. You always have to be aware of that. But just, you know, as long as you follow the markets like we do from a technical aspect, you'll see that breakdown and be able to protect yourself as soon as possible. Okay. So same thing with the housing market. So, you know, is it a good time to buy real estate right now is the $1 million question. Well, I think, you know, you always have to have a place to live, right? So maybe if you're, sitting in a super expensive home right now that you've had for a long time, maybe not a bad time to think about cashing out. You can talk to your financial advisor about that, and then roll that money into another home, maybe a smaller home or something in a different area where you could get an as big a home, but in a less expensive area, and still have a great place to live, maybe with no mortgage. That would be ideal. And then if the market drops, 40% on a $400,000 home is a lot less than 40% on a $2 million home, right? So if you're sitting in a situation like that, you've got some real good choices. If you're a first-time home buyer, it's tough out there because rents are pretty high and it's really hard for them to afford homes at this point. So everybody's got to assess their own situation. But that's the housing market. So I think probably at some point we're looking at a fairly doozy correction, okay? And of course, every time you get into a bubble, historically, you hear the following: it's different this time. It's always different this time. During the tech bubble back in the year 2000, when that cracked, everybody was saying it was a different market back then. It's different this time. Technology, is here and here to stay, and things, we got the .coms back then, but eventually it broke, okay, and dropped down. And if history is any teacher, the same thing will happen, not only to the housing market, but eventually to the stock market as well, okay? So there you have it. I can't say that it's already happening in the stock market because we're at all-time highs. All right, so we're still bubbled. Some people will say it's starting to happen in the real estate market. I think we saw a little bit of it during this move down here, but it's recovered. So I think it's still pretty bubbled in most areas. All right, so those are the tables I want to take. We only have a couple minutes left. So I do want to jump over and take a look at some of the live charts on the Dow. All right, now one thing I'm focusing on, I'm going to open up this daily chart on the Dow here. And I'm just going to focus on this current move up that we've been having here. So one of the things I look at when I look for trends to end, of course, is the Elliott wave count. And during any trend up, all right, there's always a smaller Elliott wave count inside that trend, right? And so if the trend is starting here, and we're just going to measure this move up here, do we have a 1? Is this a 2? Is this a 3, 4, and 5? And are we almost at the end of this move up? Looks like it, okay? Could keep going up a little bit, but again, it's getting there. Do we have bearish divergence inside this wave 3? Because there's 5 waves inside 3. Getting there, isn't it? The last thing I look for is the hook. How many people have heard me talk about the hook? All right, here's the hook, right? We're going to go fishing, all right? The hook usually occurs right at the end of the trend because it represents the minor 5 inside the major. So it would be a 4, 5. And that means the profit-taking shark is on its way, okay? And pardon my drawing, but there it is, okay? So it's going in for the hook. And of course, we've got to put a little bait on the hook, right? All right, so it's going in for the hook. And that means eventually when I see the hook, we get that sell-off or profit taking. And again, I don't think this is going to be a major change in trend, but I do think we're probably looking at some type of pullback here. And what I usually do when I draw these type of things is I grab the retracement, put it at the bottom of wave 2, bring it up here. And that's kind of the area where we probably can expect some profit-taking pullback, which is kind of what I showed you on those other charts before we see a move back up. All right. So I just kind of wanted to go over that before we end. Okay. So we're at the end of the 30 minutes. I hope this helped you guys and you enjoyed it. And I do hope to see you back here, of course, next week. We're going to be here every Wednesday. We're live on YouTube. We're live on Facebook. And we're also, of course, live on LinkedIn as well. So we try to get out there and get this information out there. Now, one last thing is, for those of our clients out there, don't forget we have the client support webinar in 30 minutes. So if you're having any issues or any questions, feel free to come to that. It's free for our clients. And the purpose of that, and I hold these every week as well, the purpose of that is to answer any questions you may have each and every week. That way questions don't go unanswered for quite some time. All right, so definitely attend that. That's in about a half an hour. All right, so thank you for attending. All right, I will go ahead probably and end this webinar in just a few minutes, and we'll see you back next week. Have a great week, everybody.